All right, in this training module, we're going to be covering fees, effective rate, and statements. As usual, I hope you have a notepad and pen. This one, we're going to get a little in depth, and there's going to be some things that you will want to take notes on. So grab a notepad and pen if you don't already, and let's get into this. So the topics we're going to cover in this training module are going to be effective rate, which is very, very important, what a daily discount is, miscellaneous fees in the industry, and how to read statements. So let's get into this. So what is an effective rate? Well, something about statements is there's a lot of different statements which we're going to go over, and most of them are very complex and difficult to understand, especially as a business owner. These things are not designed for a business owner to be able to simply open it up and typically know exactly what their rate is. So that's why we're going to go over this stuff. So when it's hard to know what your rate is, it's hard for somebody to come in and ask them, what do you pay now? And then to actually understand and actually know that. So it's very, very critical that you know how to read a statement, because you're the professional and you need to be able to show a business owner that you know what a statement looks like and how to actually dissect it. So what the effective rate is it's the actual bottom line. It's very easy. It's not complicated like the statement is, but the effective rate is the bottom line, what matters to the business owner, and it just filters through all the fluff in a statement. So we're going to go over some examples, but effective rate is the bottom line. What are you actually paying at the end of the month when everything is said and done? That's what the effective rate is. Daily discount is not on all merchant accounts, but is definitely something you need to be aware of and something you need to be able to identify and be able to point out to a business owner. So what daily discount is, this is when a portion of the fees are actually taken on a daily basis. Most merchant accounts are set up where all the fees are deducted at the end of the month. There are cases where if somebody's on daily discount, fees are actually being deducted daily, and then at the end of the month, they still have some other fees taken out. So if a merchant isn't aware that they're on daily discount, then it's going to be a big shocker to them if they don't know that fees are actually being held from the batch and the full amount of sales is not actually being deposited. So some people, and you're going to find as you get in this industry, a lot of people aren't actually looking at their numbers. They don't actually look at their deposits and match them up with their batches. So a lot of people don't even know that they're on daily discount. And if we can educate them on this, it's going to be a shocker, and it's going to definitely make you look like a professional. So here's an example of daily discount. Let's say somebody runs $100 in sales that day. Well, when they batch the machine, instead of the entire $100 being deposited into their bank account, let's just say $98 will be deposited. So that means they're on a daily discount where 2% is going to be withheld daily. So the issue with daily discount is it doesn't actually show up to the business owner as a fee. It's not something that shows that they deducted the $2. It's just that the full sell amount wasn't actually deposited. So it comes out totally different. It's harder to catch. And again, we're going to go over it. So in merchant services, there is a lot of miscellaneous fees at the month's end for a business owner. Now, some companies have a lot more than others. Some only have a couple. But a list of the most common miscellaneous fees are going to be the statement fee, account access fee. Maybe they have an online fee so that they can access all their transactions and statements online. There could just be a standard service fee, debit access fee. This is so that that business owner, they're literally paying to have access to run a debit card. As crazy as that sounds, occasionally you will see stuff like that. Paper fee. A lot of companies promote we provide paper. It's not normally for free. Okay, yeah, just call us when you need paper. Well, they might only call in once or twice a year, but they might be getting a paper fee monthly. Okay, PCI fee, totally an industry standard fee, batch fees, and of course, annual fees. So there can be a lot more than that. They can be called all sorts of different things, but that's a general list of the most common miscellaneous fees. So let's go over an example of tiered pricing here. So this is off a stack of statements, sample statements that we have. And if you remember, tiered pricing, there's 3 different tiers. You have qualified, you have mid-qualified, and you have non-qualified. It's important if you're looking at a statement right out of the gate, that business owner most likely doesn't know what tiered pricing and interchange pricing is. So when you get a statement, you need to be able to figure out if they're on tiered pricing or if they're on interchange pricing. So on a statement, there's all sorts of stuff going on here, but you're going to look for things like this: qual, discount, mqual, discount. And if you keep looking, I'll just go to the top. It's the first one I see, nqual, discount. Okay, so this is their qualified rate, their mid-qualified rate, and their non-qualified rate. Over here is where you're going to actually be able to see what the discount rate is for each tier. So qualified discount, this is 0.0149. It's normally in the form of a decimal, so this is 1.49% would be their qualified rate. mqual, it's going to be their mid-qualified right over here. 0.0269, that means their mid-qualified rate is 2.69%, and then their non-qualified rate is going to be 3.19%. So when we get a statement, it's important to be able to know how to look at that and say, okay, you're on tiered pricing. Right now you pay different rates depending on the tier. The way that that tier works is whether the card is swiped or keyed is going to determine which one it qualifies as. Whether it's a rewards card or a basic credit card, there's a lot of different factors, but just know that you have a qualified, mid, and a non-qualified. So if someone ever says, well, my rate is 1.49%, that's most likely someone that is on tiered pricing, and they're only referencing their discount rate for qualified transactions. They're probably not even aware of a mid and a non-qualified rate, what it is, and that it has a different discount rate. The other thing on here, POS watts, this is going to be their transaction fee. So they're at 25 cents per transaction. So if you get a statement, the goal here is for you to be able to say, okay, you're on what's called tiered pricing. You have a qualified, a mid, and a non-qualified. Here's what those 3 discount rates are, and you're paying 25 cents per transaction. Here's another example, and I apologize, it's not the greatest quality. So on this one, they're not actually labeling it qualified, mid-qualified, and non-qualified. They're simply showing your Visa, your MasterCard, and your Discover. Your discount rate is 1.83%. Now I know this is just one page, but going through it, nowhere in this statement does it actually show qualified, mid, and non-qualified. But when they show their discount rate, 1.83%, I know that that is their qualified rate. Now they're disguising the mid and the non-qualified rates down here. They're not labeling it that, but look, this is the rewards card. These are the business cards. These are the high-end reward cards, or maybe they were manually entered cards. So on top of that 1.83%, there's different discount charge here. So you would have to go through and reverse do the math to figure out the exact mid and non-qualified, which we're not going to do. I'm not trying to teach you that. I'm just pointing out that this is another example of a tiered merchant account that's disguised. You can only see what their qualified rate is, but right here you can point out this is your mid and your non-qualified rates. They're not actually even disclosing what those percentages are, but this is where it is. The rewards cards, the business cards, the key entered cards are costing you more, and here's the proof, and that is on top of the 1.83%. Okay, so that's another example of a tiered statement. So let me give you an example of an interchange pricing statement. It's still going to show the rates over here, and as you see, a lot of these statements are different. So on an interchange pricing, you will not see words like qual, mqual, nqual. They don't have the qualified, mid, and non-qualified. They simply pay a fixed percentage above interchange. So discount. So we've gone over what the discount fee is, the discount rate. So you go to discount 0.0053. What that's telling you is that this account is set up, they're paying 0.53% above Visa MasterCard's cost. Again, POS auths and watts, 12 cents. So this is an interchange pricing account. They're paying interchange plus 0.53% and 12 cents per transaction above Visa MasterCard's cost. Okay, so MasterCard, their discount rate, 0.53%. Visa, their discount rate, 0.53% above cost. And on the next page, it would show Discover. That's how you identify it. You won't see the words qual, mid, non, and the fact that it's 0.005, that's 0.5%, that tells you what their markup is. Another example of interchange pricing. This one doesn't do it as a decimal. Here's their Discover, MasterCard, Visa, debit. This one doesn't do it as a decimal. It's just telling you right there, 0.45%. So if you ever see this and somebody tells you, I only pay 0.45%, well, this is what they're paying above interchange. It's what they're paying above Visa MasterCard's fees to the processor. But you can see on a statement like that, very simple to see their discount rate or discount percentage is how they're wording it here. So let me give you an example of daily discount so I can better explain what I was saying at the beginning. So at first glance, now if you don't know how to read a statement, you would think when you look at this, they paid $72.35 on this volume. It's logical, that's what it looks like. This is the only amount that the business owner actually saw charged to their bank account. It's the only amount that they actually saw deducted. Okay, but if you go down here, less discount paid, sometimes it'll say discount collected. It'll be worded one of two ways: less discount paid or discount collected, $85.93. What this is that's the amount of money that was withheld out of the daily batches. Again, they'll never see a deduction from their bank account for this $85.93. It's simply money that was in the terminal that never actually got deposited to them. So to get the accurate total amount paid in fees, you'd have to add what was deducted, and you would also need to add what was taken on a daily discount. You add the two of those together, that's going to ultimately give you what they paid in fees. Now, on most daily discount, they'll also have a list of their batches. So this is another way that you can see it. So this right here shows the date and the batches. This is amount they batched. If you go over here, this is the amount that was actually deposited into their bank account. That $27 is the fees that were held that day, right? So they ran 1,700, but they only got that much. They ran 3166, but they only got that much. And you could do it down the line, 538, they were only deposited 529. So most people on daily discount about this. Some of them do, but most don't. So if you walk into a business and you do the math on effective rate, which we're going to go over, and the number seems too good to be true, or you have somebody that's running $20,000, but they only paid $150 in fees, if it's too good to be true, they're on daily discount. You need to figure out what that money is that was withheld on a daily basis so that you can add it to the total amount to get the accurate number on what they're actually paying in fees. I'm gonna give you a tip here. If you can identify daily discount and point this out to somebody who's not aware of it, they will respect the heck out of you as a professional that knows what they're talking about and how to read a statement. So how do we calculate the effective rate? At the beginning, I said the effective rate is the bottom line. It's all that really matters to a business owner. And to find it is very simple. You can skip all the other fluff in the statement, and all you need to do is simply divide the total fees paid by the total amount that they processed in credit cards. Very simple equation. It's going to give you an answer as a decimal. So it's important to understand if it says 0.032, you have to move that decimal over. That's actually 3.2%. Okay, so when it comes out as a decimal, that means you did the math correct, and you just need to understand that that is actually a percentage in the form of a decimal. So there's an example right there. If it comes out 0.033, that equals 3.3%. So let's go over the effect. In the previous module, we talked about tiered pricing versus interchange pricing. Tiered pricing is pretty old school at this point, and it costs merchants more typically. Interchange is typically a better deal for the business owner, and it's also very transparent because they know how much their processor is actually making on any given card. So here's a sample of tiered pricing. If you were to pull your calculator out and do $500.10 divided by 10,432.31, you're going to get this as an effective rate. That's an effective rate of 4.79%. This is an example of interchange pricing. These two statements are from the same type of business. They're both automotive. The one on the bottom has slightly higher fees, but they have more than double the amount of processing. Okay? If you do the math on this one, their effective rate is 2.3%. Same type of business, different volume amounts, significantly different effective rate. Now, obviously, there's more to that statement, but the bottom line is that interchange pricing is a much more fair deal. It's much more transparent to the business owner. And at the end of the month, effective rate, when everything is said and done, when you add the batches, when you add the miscellaneous fees, when you add the discount rates and the batches, when you add everything together, their effective rate, they're going to be farther ahead, typically on interchange pricing. So you can see why understanding what effective rate is important, and why that's all that really matters to a business owner. Because that's the number when you take all the fees and you actually combine them and break down what was the final percent that I paid. That's the only number that actually matters to a business owner, and that's what an effective rate is. So here's another one. The effective rate, if you didn't understand cash discount and you just did the effective rate on this based on what it looks like they paid, you're going to get a significantly different number than what they actually paid once you include the daily discount rates. So for somebody that doesn't know, you walk in, you do that number divided by that, total fees divided by processing volume, you come back with 1.15%. You're thinking, wow, that's an amazing deal. I don't know how this person's rate is so low. Well, that number is too good to be true as an effective rate on traditional pricing. So that throws up a red flag. You need to look a little harder. Go find less discount paid or discount collected. Find out what that number is by the time you add it in there. Now you have a more realistic effective rate. You can see the value of understanding how daily discount works and why you look like a professional when you can identify it, show it, explain it, and then show them the difference in their effective rate. So if you were a business owner and you thought that you were paying $72, and then a professional walks in the door that can actually show you that you paid closer to $150. When they say, hey, I know you thought your effective rate was 1.15, but it's actually 2.5, how would that make you feel if you had been on that merchant account for years? They don't feel good about it. Let's put it that way. So it's important for you to be able to identify this, whether they do business with us or not. They have the right to understand their bill and know that fees are being taken out daily. So there's lots of different statements out there. We're not going to go through each one of these, but You got to start getting used to identifying, is this tiered pricing? Is this interchange pricing? Right here, discount rate, 1.82%. That's definitely going to be a tiered rate because it's that high. They look different. They have a different feel. There's different companies. They lay them out differently. Some are more confusing than others, but at the end of the day, if you can just stick to the effective rate, all you really need to know is, are you on daily discount or not? And if you're not, I'm just going to simply divide the fees by the volume and get you what your effective rate is. That's the bottom line. And if you can stick to the effective rate, just keep it simple. Let the business owner know this is the number that actually matters. This is your bottom line price. This is what we're going to work with. So to recap this training module, the effective rate is the bottom line. It is what truly matters. Again, keep this simple. Statements are very complex. I want you to practice reading them, but you don't necessarily need to stumble over them in front of business owners. Get to what the fees are and what they processed, and just get to the effective rate. Keep the momentum and the conversation moving forward. It is important for you to understand what daily discount is. It absolutely skews the actual effective rate. So it's critical that if they're on daily discount, we can identify it so that we include it in the total fees paid. Just understand there are miscellaneous fees in the industry. They're going to have different names. There's going to be different amounts of them with different companies, but you could understand that those fees start adding up very quickly. If somebody has $50 in additional miscellaneous fees, that's something that we can point out, that we can show that we're now able to get rid of completely on cash discount or reduce on traditional. When reading a statement, if you can point out everything that we just covered, you are one step closer to being a professional in this industry. That merchant, that business owner will respect that. They will understand and see that you have a professional and know what you're talking about. Therefore, it will establish trust. And we all know that being likable and being trustable are the two main factors.